I expect gold to go to 8,000. That's just matching the old highs, though. That's not even abnormal. That's like saying, oh, I did it again. How about we go a lot further than that? Don't be surprised. Like 20,000. I expect silver maybe be $200. That fast. And people are looking for normality. Like, oh, we go up 4 steps and pull back 2. Go up 3, pull back 1. All that nonsense. The norms will be shattered. And you'll go into a new reality. You not only want to be in monetary metals, you want to be in silver as opposed to gold, because it's going to beat gold. I'm strongly of the assessment that when that first chart breaks out, gold versus S&P, as I said, it's already broken out versus the broader stock market indices. Silver's going to break out versus gold.
Michaeloliver, a renowned market analyst, shares his bold predictions for the future of precious metals in this eye-opening video. According to Oliver, gold is poised to reach $8,000, matching previous all-time highs. But he emphasizes that this is just the beginning. He envisions a far more dramatic scenario, suggesting that gold could surge as high as $20,000. Oliver believes silver will outperform gold, potentially hitting $200 faster than most investors anticipate. He warns viewers to discard traditional market expectations like gradual step-ups and pullbacks, as he predicts these norms will be shattered. A new reality is approaching, and monetary metals, particularly silver, are set to dominate. He also highlights gold's strong performance against the broader stock market indices and signals that silver is ready to break out versus gold itself. Investors looking for significant returns should consider positioning in silver to capitalize on this unprecedented opportunity. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now listen to the interview.
So silver's been outperforming gold for the last half a dozen months or so, gaining. But there's a green line on that top chart, the spread chart. If you can clear that line, this spread breaks out, and that line goes back over 3 years. Ceiling, ceiling, ceiling. It's called what you call a base, okay? You break out over that, it's a fresh buy signal, meaning time to buy silver rather than gold. Doesn't mean gold's going down, just means silver's going to beat it. So if you have the combination of that first chart, gold breaking out versus the S&P, what it's telling you is you want to be in monetary metals, not the stock market bubble. This chart says you not only want to be in monetary metals, you want to be in silver as opposed to gold, because it's going to beat gold. I'm strongly of the assessment that when that first chart breaks out, gold versus S&P, as I said, it's already broken out versus the broader stock market indices. Silver's going to break out versus gold. And already this spread chart doesn't show where it is right now. It's up. It's moving up toward that green line right now. Divide gold into S&P, it's going to break out. What does that mean? It means that this is a fresh, massive technical base breakout. Treat it as a price chart. If you looked at this and saw it as a price chart, you say, oh boy, I'm going to get on board. And I'm going to buy. Well, this means buy gold, sell S&P. Like you want to go market neutral, buy gold, sell S&P. You put a spread on. But it's also telling you that gold is going to surge versus the S&P. Now, by the way, when we do this same chart, we didn't have it in this report, versus the Dow, or gold versus the New York Composite, both very broader indexes that aren't front-end loaded with a couple of AI stocks like the S&P is. Gold's already broken out. But when this guy breaks out, this spread breaks out, it's telling you as a major asset class shift is underway, it's commencing. Gold is now going to outperform the S&P. So if you invest over spans of time and want the better asset class, it's saying gold is going to lead the S&P now. It's the better place to be. And our assessment is, one, it's going to be the consequence of two things, gold going up and S&P going down. So this is our table-pounding technical chart to nail you all. If you're in the stock market or the gold market or wherever you are, this is the most important breakout that's about to occur. And if it breaks out, which it will, this is too persistent, okay? It's saying, I just began. So if you think gold is old, it's just begun its major shift against the paper bubble. Over that time, there have been two major bull markets. And if you measure from the bear low that preceded the bull market to the bull market peak, bear low to bull peak, both moves, one peaked in 1980, one peaked in 2011, were 8-fold moves. Not the same dollar amount, but the ratio move. The same dimensionality of price gain, 8-fold, bear low to bull high. We're only 4-fold. We started from a bare low at 1,050. Multiply it times 4, okay? You're a little bit better than half the dimension of those two prior bull markets, which were of different duration, by the way. One was about 3.5 years, one was about a decade, okay? So I'm not counting the years, I'm just saying how much did it move? And it moved under circumstances then that are by no means as dynamic pending as the ones we're sitting on right now. So I expect gold to go to 8,000. That's just matching the old highs, though. That's not even abnormal. That's like saying, oh, I did it again.
Michael, a leading market analyst, shares his detailed outlook on precious metals and the stock market in this insightful interview. He explains that silver has been outperforming gold over the last several months, and a critical spread chart indicates a major breakout is imminent. Once silver breaks above this long-term ceiling, it signals a fresh buy opportunity, suggesting silver is set to outperform gold. Not that gold will decline, but that silver's gains will be stronger. Oliver also highlights gold's breakout against the S&P and other broader stock indices, signaling a significant shift from the stock market bubble to monetary metals. Investors are being warned that gold is entering a major bullish phase, and the technical charts indicate that this is just the beginning. Historically, gold's prior bull markets achieved 8-fold gains from bare lows to peaks. Today, gold has only reached a 4-fold increase, leaving ample room for a surge. Oliver forecasts gold could reach $8,000, with silver potentially reaching $200. He stresses the importance of using these chart signals to position strategically, including gold versus S&P, spreads for market-neutral strategies. The data points to a significant asset class shift, with monetary metals, especially silver, becoming the superior investment over traditional stocks. Let's get into the interview.
So demand for silver as an industrial metal has been already in a supply-demand deficit, yet silver hasn't responded. It's still stuck in that range of 50 years ago. Well, it's slightly out of it right now, but how come silver's been in that range? And let me comment on that for a second. We went back and studied, and we could have thrown darts at many commodities, but I threw them at copper and lead, okay? And I went back to the late 70s, 80s, 2000 to the present, and in fact, I got the charts from the Federal Reserve of St. Louis. They have a base metal price charts. And there was a range, a reality for copper price and for lead price from the 70s, 80s, 90s into mid-2005, 2006, and 7, where they were stuck in this multi-decade range. Just like silver's been in this 50 to under $10 range, back and forth, but for 50 years. Copper in 2005 and 2006 broke up out of that price range and literally in a couple quarters quadrupled in price. Oh yeah, it had a hard sell-off after that, but it never went back to the old reality. Instead, the average price for the recent decades has been what? 4 times the price of the prior decade. Look at lead, same story, different year, happened in 2007, broke out of its little quiet reality, quadrupled in price, actually more, in a matter of a couple quarters, and lived in a new reality. How come silver's still stuck, or has been stuck, for 50 years? Gold hasn't done that. Gold's continually made dramatically higher highs at each move, but silver's been capped. Well, one argument is, and it's got backing, is that banks, probably backed by the Fed or encouraged, have been trying to control silver price. Ultimately, that kind of manipulation doesn't work. Reality takes over. And sometimes when you compress something like that, all you've done is make it explode even more when it unleashes. So good luck, guys. I think we're on the cusp of that right now. And I think silver is about to do something. And we see it in the technicals. I see it in the spread relationship. That's why I'm watching gold S&P, moving in the monetary metals. So this industrial aspect you mentioned, yes, it's a factor. But ultimately, there's bigger factors. And it's the movement in asset classes into monetary metals because of the perceived, and I think will show itself very soon, actual vulnerability of the stock market, especially the U.S. stock market.
Michael, a leading market strategist, dives deep into the unique dynamics of silver and gold in this compelling analysis. Despite strong industrial demand, silver has remained stuck in a multi-decade price range, barely moving above historical levels. Oliver compares silver's stagnation to other base metals like copper and lead, which experienced dramatic breakouts in the mid-2000s, quadrupling in price within a few quarters. He suggests that silver's unusual restraint may be partly due to intervention by banks and financial institutions, but stresses that manipulation can only delay the inevitable historical patterns, and technical charts point to an impending breakout, signaling that silver could finally escape its long-standing ceiling and enter a new, much higher price reality. Oliver also connects this to broader asset movements, highlighting gold's continuous upward trend versus the S&P and the increasing flow of capital into monetary metals. Investors watching these shifts are likely to see silver outperform gold, and gold continue its surge, particularly as vulnerability in the U.S. stock market grows. This is a pivotal moment for precious metals. The technicals, supply-demand dynamics, and market shifts suggest a major breakout is imminent, making silver and gold essential assets to watch. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.